What's going on, guys? In this video I want to show you how I planned out my morning today. So what we're looking at is a 15-minute chart here on the NASDAQ 100. I'm going to give you a couple of things that I was looking for coming into today's session, a couple of things that I was noticing, a couple of ideas that I was willing to trade, and the trade I actually took. So we're going to outline that. First things first, there's a couple of levels on our chart that I want to get you familiar with. One of the levels is our key level of 19,714. Okay, so that's down here in this area. That is an area that has been coming into play for the better half of, over a week, 2 weeks now. Definitely a level of demand that I wanted to keep notice on. We've got a daily 10, we've got a daily 50 SMA, we've got our daily 5. Okay, those are the levels that we're looking at. We've also got our bias here, which is our 20 SMA. Now, if we kind of look at yesterday's price action, we put in a high, we started to sell off into power hours, started to sell off into the end of the day. You can see Asian session kind of just slid a little bit, and then London kind of really put in these lows. So the overall direction of the market today was down. Now, one thing that you have to kind of keep in mind is that anytime you are selling off into a level of demand, you never want to be overzealous. Okay, so was there an opportunity for a short trade? Absolutely. I took a short trade for about 35 points, maybe. I'm just going to say 30 to be safe. It wasn't that big of a trade. It was about $120 on a few micros on the first entry, and then I double backed into that trade for another $100 with a little bit heavier size, trading one mini contract. And I want to show you exactly what I was looking at. So off the open, I was kind of expressing to the people in that trade with me in my community was that before we wash out, I want to see a bounce. Okay, I need to see a bounce. If we just kind of confirm the pre-market low and start drifting down, there was no way that I was going to take that short position. Not looking to get trapped. I needed to see some type of bounce and rejection spot. And this was your reload short. So right off the bell, the first 15 minutes, it spikes into our supply, which is our bias here, the 20 SMA. We get that spike into the 20 SMA. It does get rejected, and it was full go here below 79s. Okay, so 79s, where I'm getting that from is if you look at the initial 15-minute candle, that price is 19,779. Keep in mind on a trade like this where you're shorting into demand, again, we have plenty of space down here to 714. There's over 50 points worth of room if we fully touch and tag it. We didn't. So keep in mind that anytime you're that close to an area of supply or demand, you need to think, I need to get green if I'm going to take this trade, and I need to get out of the trade. And when we started to really push down 20, 25, 30, 31 points, 32 points, I started scaling off the table. Now, next candle kind of opened up. It did kind of bounce a little bit right back to around that 80 zone where it was about break even, right? From the initial short, I was fully out of the initial scalp. And once I seen us start to get rejected at that first 15-minute candle low, I shot the mini short and grabbed about 5 points down. Now, all in all, it went down all the way to a price of 739 from an entry price of 779. This is a great trade. This is a 40-point trade. I don't think anyone would be too, upset for taking 20, 30, even 40 points. Again, you're never really probably going to take the whole move. If even if you were holding for the 714, it started to bounce against you, started to lose a little bit of steam, you can just get out of that trade. Now, the next trade idea here was if we reclaimed our bias, which is the 20 SMA, if we reclaimed it, okay, there was a potential that we kind of pushed into this previous swing high from pre-market. This was another little scalp that I took. I didn't take much off the table on this. I just added about another $80 to my overall P&L and just wrapped it up. Fully transparent, I didn't feel too comfortable with the long, because what I was kind of thinking is if we got back over the 20 and it was just a little bit of a trap and we wanted to proceed lower, I didn't want to be involved in that trap. So as soon as we started to reclaim, right? And when I say reclaim, that means price action is trading back over the 20 SMA. As soon as we started to reclaim this 20 SMA, I shot along here, took a little bit of of money off the table and just got out. Now, if you kind of look at where we stand right now, it's currently going into lunch hour. Today is the 6th. So if you want to go back and back test this, during lunch, I always look for an opposite direction move during lunch. And one area that is sticking out to me why it's seemingly that the market is pulling back is we're running into this daily 5 SMA. Okay, so this green line here is our daily 5 SMA. You can see it's kind of in the middle, upper region of the overnight London highs here. Again, all longs are off the table until this reclaims. Okay, so you would need to see price break over basically 19,960. You would need to see a new high get put in over that, and you would need to see some kind of consolidation pullback, maybe a flag pattern, something, and then you would need to see this area hold, and then for that push higher. This area up here is interesting to me, 20,045, right, in that zone. The last 2 trading days, it's played a key factor. It's played a key role when we've reclaimed it to the upside, and it's also played a key factor when we've lost that area. Look at what happens when we lost that area going into yesterday's close. We kind of just sold all the way off. So if this is, area is going to hold up here, then maybe if this continues to bounce and we get over our daily 5, you can see that push into 20,050. And again, if it fails to reclaim this area, that would be technically a lower high, and you would look for that continuation move to the downside through your 714 area. If you notice that area yesterday, look at what happens when we kind of tested and tagged it, right? We broke it, we pulled back, we broke it again, we pulled back, and then finally started to get on a little bit of a trend. Yesterday wasn't the easiest of trading, although when you look at it in hindsight, it looks like, hey, you should have just got long anywhere. Technically speaking, that's kind of true. If you would have got long anywhere within the first hour to 2 hours, you would have made money. But again, it was a very choppy move. There was, 20-point upswings, 30-point downswings, 30-point, back and forth. So it wasn't the easiest of a move to trade unless you had a really sweet entry off the open somewhere around that 20,030s, 20,040s, even 50s area. Then you could have, kind of held that for a little bit of a move. So all in all, what I'm watching for to kind of finish the day, what I'm watching for going into tomorrow is, do we reclaim our daily 5 SMA? That's definitely going to be an indicator whether I'm going to continue my bias to the long side into 20,050s and beyond, or I'm going to start to play this back down towards our low of day and that key level that I have of 19,714. So I don't really want to mess around in this region, right? For me, if I'm not playing the lower extreme or I'm not playing the upper extremes, I'm going to pretty much sit out of this middle area. It's just not interesting to me whatsoever, because, you have a 50-50 shot that you break to the upside. You have a 50-50 shot that you fall to the bottom of the range. And anytime you're in the middle of a little bit of a channel like this, right, you don't really want to start putting on a lot of size. You don't really want to start putting around, half dozen, 2 dozen, a dozen trades. You want to kind of wait for this level to get broken, retested, and hold, or you want to see us fall to the bottom of this range and either see some type of higher low where you can get back into the long side and play it back up, or you start to see the bottom of this range break and then start to push lower. Now, if we do start to push below 19,700s, I would be looking at your daily 10 as the next stop. That's going to be 19,660s, 670s, depending on when that happens. That is more interesting to me than trying to catch a little scalp here down, catch a little scalp here up. You're basically just chasing the candlesticks around like a chicken with its head cut off. So make sure you guys stay extra patient. There's no rush here, guys. You don't have to put on a lot of size. You don't have to try to make $1 million today. Take it day by day. Make sure that you guys are locking up your accounts when you're green. Same thing for when you're red. I would rather protect a $250 red losing day than to have that $250 day turn into a $2,000 daily max loss blow up day, right? You're always going to get another opportunity to trade. You're always going to get to be able to see more price action. If you're not seeing the market clearly, or the price action is not working well with your strategy today, tomorrow, there's always going to be another opportunity where you enter into a trade and it's basically hands off. You don't have to do anything. It runs up to your take profit. Always remember that, guys. Make sure to throw me a thumbs up on this video. Make sure to subscribe to the channel. If you guys want to join me inside of my community, that link is down in the description box below. Also, guys, Apex's 80% off sale is back on. At the top left of the screen, you're going to see my discount code DAnthony. You guys can use that for 80% off your evaluations. I would highly appreciate it. That kind of helps fund the channel, and you know, every little bit kind of helps, right? So with that being said, I'll see all of you guys on the next video. Stay safe out there, continue to make some money, continue to stay disciplined, and I'll catch you guys on the next video.